Mr. Montek Singh Deputy Chairman of the Planning Commission. Mr. Ahluwalia, before we get to the credit policy, a quick word from you, because the market seemed to be in a bit of a panic mode on account of the DMK pulling out of the government. We just heard the Finance Minister indicate that the matter is under the consideration, and they're hopeful of getting some sort of a resolution through. What would you advise investors, because there seems to be a certain amount of panic in the market?
Well, you know, markets will react to political developments on a minute-by-minute basis. I don't have any advice for the markets, but I think these are issues that are somewhat different from the fundamental economic situation and the strengths of the economy. And actually, my advice to markets would be that they should not be too distracted by political events, which will be managed in the right forum. They should be really focusing on the economic situation, which I think is looking better.
But do you think there's no threat to, because at the end of the day, markets don't like political risk, and that's the reason I asked you that question. And a lot of the rally that we've seen played on equity markets has largely been driven by foreign flows, and that's what has been financing our current account as well, which is why there's this fear in the market.
I have no doubt whatsoever that on the day there is some political event, you can see a lot of volatility. Some of it is perhaps even manipulated. But over a period of time, markets will reflect economic strengths. I don't think that they should be focused on individual political events, though I recognize that those obviously attract a lot of attention. I have no inside knowledge on how the political side is going to move in this matter, but you can't stop markets from essentially playing out whatever they feel is relevant from the point of view of the future. By and large, I think markets should look at what the economic strength is, and I don't think these things affect that too much.
But what about the image factor, Mr. Ahluwalia? You know, at a time when Indian markets are completely hostage to global cues, such a news development, I'm sure, will have impact on India's image and the stability.
I don't think that it will. I think people are aware that we are a functioning democracy, and in a democratic system, you have to manage different people's perceptions of events. I think it's a test of the system, whether it's able to do that well. But I don't think it affects India's image negatively. I think what it shows is that people do take positions which are very often quite different, and the system knows how to manage them.
Just a quick word on this before we move to the credit policy, Dr. Ahluwalia. So essentially, there is no threat to the government, or you think such fears are a bit unjustified, that, you know, that there is stability in the centre?
I think on this matter, the finance minister has already made a statement. He's much more aware of what's going on minute by minute. So I would leave markets on this matter. I would advise them to judge by what the finance minister has said, and I'm sure that they will be doing so.
Your reaction to the credit policy then, because we've seen the central bank cut policy rates by 0.25 percentage point, which is again largely along expected lines, but the commentary probably isn't as dovish as markets would have liked it to be. The RBI indicating that there's little elbow room for it to cut rates from here on, even though it wants to maintain a pro-growth stance. How would you read into these comments?
Well, I think the most important thing about the rate cut is that it is a clear signal on the part of the RBI that although the global situation is difficult, and there are domestic problems also, the fact is that inflation, though still uncomfortable, is subsiding, especially non-core inflation. I think the governor has said that more fiscal room has been created, and I read the rate cut as a signal. I know that industry is disappointed because they would have wanted a stronger signal. But you know, monetary policy is not like fiscal policy, where once you produce a budget, I mean, that's it for the year, by and large. I think monetary policy can be adjusted as the situation develops. That's what they've done in the past. Some people feel that the rate cut could have been larger. I think it could have been. But broadly, the important thing is the signal it gives. You know, I must emphasize that unlike in other countries, the rate cut here does not actually translate all that automatically into pumping liquidity into the system at a particular rate. The Reserve Bank governor has said that they're watching the liquidity situation quite carefully and will make sure that there is no imbalance there. So I read that as a positive signal, perhaps less than what many people in the industry were wanting.
Mr. Ahluwalia, several bankers whom we've interacted with after the policy, they are of the view that for PSU banks it will be difficult to really pass on the benefits of this rate cut, which means the policy transmission may not happen.
Well, you know, this is something that many people in the industry don't realize, that the repo rate does not translate automatically into greater liquidity, for the simple reason that nothing pushes the Reserve Bank to lend limitlessly at the repo rate. The repo rate is actually a signal of how the Reserve Bank sees the situation as evolving. Is it a signal that monetary policy should now move towards a more supporting growth position or towards a constraining demand position? And I think that signal is very clear. Now, as far as the banks are concerned, I mean, whether they can lend more is going to depend on their own resources position, how their deposit growth moves, and also at what rate they can attract deposits. And that rate, to some extent, depends on what's happening to inflation. So all these things are interconnected. But the idea that by simply lowering the repo rate, you can lower the long-term interest rate, I mean, that's just not correct. So there's no surprise there. But the fact that the RBI is giving a signal will influence banks, because within themselves, if they were wondering, are things appearing to improve or not, the RBI is validating the judgment that things are getting better, and hopefully banks will respond accordingly. But it's ultimately their decision, and how much money they can lend depends on how much money is available after the fiscal deficit needs are met, and also the rate at which the banks are borrowing, which will be itself affected by not only the rate of inflation, but the expectation of the rate of inflation. So there are many factors that go into determining the long-term rate. I mean, as far as the RBI is concerned, they've signaled in a particular direction. I think that's the right direction. And it will lead to a softening of the interest rate climate, which I think is what the widening of the fiscal space suggests in any case. Plus the fact that the government is taking a number of steps to strengthen growth prospects, remove implementation bottlenecks. That should improve the flow of finance from abroad, and if long-term money flows in from abroad, that will also ease both the interest rate and the liquidity situation.
A last word from you, Dr. Ahluwalia. The skeptics would say that this is just a feel-good rate cut and that it will do little to kickstart the investment cycle. Would you agree with that assessment? Do you think a 0.25% rate cut is going to do little to boost growth or kickstart the investment cycle?
Nowhere in the world does anyone regard repo rate movements as the key instruments for kick-starting industry. If you read the budget speech, or for that matter read the 12th plan, what is needed to restore the momentum of growth to the level that we think is possible, which is kind of maybe 8% over a medium term, but certainly 6.5% in the coming year, it requires much more than simply an adjustment of the repo rate. That's not a surprise, and that should not be a basis for either criticizing the repo rate movement or feeling disappointed. Government's very aware that it has to act on several fronts, and it is actually acting on those fronts. Thanks very much.